Okay, traders, we are in a live trade on a paper trading account. And I want to show you exactly what has transpired. We are in the micro WTI crude oil futures instrument. We are $5 into profit on this trade. And I want to show you how we got there. Number one, I want to go over here to the watch list and show you the ticker and description on the watch list so you can see what MCL looks like on the ticker. I also want to point out that you don't need a lot of margin to trade micro crude oil. If you want to trade in the current session, then you need about $475 a margin. If you want to trade in the New York session, you need $119. Just wanted to point that out to you. If you want to trade futures and you don't have a lot of money, you can trade micro accounts, and most of them start with the letter M. So for instance, if you wanted to trade the Russell, M2K is the symbol, and you need $293 for the New York session, but you'll need around $1,200 if you wanted to trade in pre-market or aftermarket. We're back over here to the trade, and how did we get here? Well, when the market opened at 4 o'clock, and that would be the Asian session. Let's zoom in here. Here's the line that tells you the delineation between the New York and the Asian session. When the market opened, it opened right here at 64.92, dropped down immediately within a minute to 64.77, and then shot back up to 65.30. Now, what my hope was for this demonstration was that the price would go back up to the previous day high, which was 65.44 during the New York session, and then we would take a trade from the top, or what we call the resistance, down to previous support, which is at 64.77. However, what happened was crude oil started trading in a range. It traded in a range for a while, and I wanted to do a demo. So as soon as price broke out of that range, depicting with the blue line here, with the blue rectangle, took the trade at 65.06, and we are currently $12 into profit, which means that we are making money. I set my stop loss at $13, which is just above that little guy right there. You see it? I'm going to zoom in here. I put my stop above that price point. That was the bullish candle that made the most sense in terms of where I should put my stop loss. In other words, price would probably go back up to there. If it was going to go back up to anywhere, it would at least go back up to there. But so that's where I put my stop loss. And I put my take profit down here at the bottom of the market, where the market said that's the low point. So that was the bottom of the market for the Asian session. So that's where I put my target. Now, what are you seeing here? You're seeing these big green and big red blocks. Well, that happens to be my liquidity location detector indicator. I'm going to turn it off for a minute so you can see what's going on here. There's my line that says that's just where I think price is going to go to. That's all. If you're trading crude oil, just know that every tick, okay, which represents a penny, okay, is $1. So every time price moves a penny, you're either making $1 or losing $1. That's the crude oil futures price point. So a couple of things I want to point out here is that we are on the 1 minute chart. I will typically use the 5 minute or the 15-minute chart to map out how I want to trade. And right now what we're in is called a scalp. We're not swing trading, we're not day trading. We're hoping that the market will move within the next couple of hours, okay, to a particular price point. If I was day trading, which I do during the New York session, I would be in the trade for as long as it would allow me to be in the trade. So for instance, on the chart right now, what you see between the little blue areas on the screen is the New York session. And based upon what I'm looking at right now, I didn't trade crude oil today. I traded the NASDAQ today and made money. But if I was trading crude oil today, what I would have done is I would have looked at the 5 minute chart or the 15-minute chart. So here's the New York Open. New York opened at $64 a barrel for micro crude. Now, here's what I would have done. I would have waited until price moved up to this point right here. Here's what I'm doing. 5, 10, 15 minutes in, crude oil, I'd be marking off that 15-minute candle right there. It opened there. It snuck down a little bit and snuck up to right there. It retreated back into the 15-minute zone. That's what I've blocked off here. And then started to move up. After price exceeded the 15-minute zone and retreated back in, and I got an up candle, in other words, a bullish candle, I would have taken that trade right here, and I would have ridden that trade for as far as I possibly could before it told me to get out. And it would tell me to get out about right here after I got a down candle, and I would have made $75. That's what would have happened on the New York session. Okay, that's how I would have traded it. A little bit different situation here because we're doing a demonstration. I just wanted to take a trade so I could show you what the process was. Okay, so I have marked out the highs and lows of the previous session with these little lines. Okay, and once prices moved past a high or a low, you don't need to mark them out. So in this situation, I have marked out the high of the previous day's high. I have marked out a significant support point of the previous day's the previous session. I have also marked out the the low point of the market, which was pre-market, okay? Not real concerned about the previous day because I'm a scalper by by nature. I'm a scalper. So I'm really just interested in the last session, what it has done. So right now, the price had snuck down here to like $15 or so, and now it's crept back up to the $6 mark. That's okay. I don't care. So here's what I'm looking at right now. I'm looking at this area as my trade. I wanted price to come back up to the previous day high and then see it capture some liquidity. I'll turn it back on. I wanted to see it capture some liquidity in here and then push back down to the session low, okay? Which I have I've got marked at $29. But for demonstration purposes, I saw that. Let's go back to the 1 minute chart. For demonstration purposes, I saw that after price went up to a significant resistance point, it started trading in a channel, and I'll mark that off for you. And when price broke below that channel, I took the trade. Then it moved down to a liquidity area on the 1 minute chart. It's showing me that there's a lot of liquidity here. I'm hoping it'll come all the way down here and take out some of this liquidity. That's why I've chosen the $29 take profit. And I also, it's paper trading. I'm going to put my stop loss close for demonstration purposes. Now, you will see that price is looking a little jumpy right now, okay? You'll not see you're not seeing complete bars. You're just seeing little ticks and wicks. The reason for that is because there are not a lot of players in the market right now, and there are probably not a lot of institutional players. When that happens, what I will do, I will go to Heikin-Ashi bars, and I will use the Heikin-Ashi bars to give me a better indication of what's going on with price action. It looks like price is going to sneak back up to my range that I marked out. Probably will get stopped out here. I don't know. We'll see. Do your own research on how to or what instruments you want for your watch list. I trade the Russell. I trade the Q. I trade the Dow. And on occasion, I'll trade the S&P. But these are my three go-tos: the Russell, the Q, and the Dow. And here's why I trade the Russell, the Q, and the Dow. I only need $292 to trade the Russell. The Dow, I only need $166 to trade the Russell. Now I'm talking about the New York session, okay? And for the NASDAQ, I only need $405 to trade the NASDAQ. So what has happened on our trade? Price snuck down to liquidity level that my liquidity location detector indicated to me, and it came right back up to that range where we got in, and now we're looking at a $2 profit. And what I'm hoping is that what you see, maybe you'll see it. I'm hoping this little 1-minute trend continues all the way down to the bottom of the day's session, the bottom of today's session. That's what I'm hoping will happen. Let's look at the 5-minute chart, see if that's viable. Yeah, not bad. Could happen. We might get stopped out. I don't know. Well, how do I get in the trade? Up in the right-hand side of the window, you have this little icon that says trade. You click on it. It gives you a trade panel, and we trade the market. That's how I trade anyway. I seldom use a limit. I trade the market, and what I will do is simply choose a buy or a sell. And in this situation, I did a sell. So I sold when price got right there. When that bar right there closed below my range line, I took a trade. Paper trade before you commit real money. Okay, so you can see how the market works and choose an instrument, okay, that you want to trade, and only trade that for a period of time until you get comfortable. I traded the Russell and the Dow, okay, for months, okay, before I got comfortable in trading them. We would have done well to trade the Dow instead of the crude oil today. In fact, I think that's what I'm going to do. I'm just going to get out of crude oil. I'm up $1. I made $1 today. Yay. Get out of it. Good deal. So let's go back over to the Dow. Let's see what we can do. Oh, look at this. This is great. There was my previous low. Let's make sure we're on the 5-minute chart. There was the previous low from the New York session. That line is an old line. There's our high from today's session, or the current session. And here's another low way down here from the New York session. And what I am anticipating is that we're going to get an up bar here. And if price closes, let's go get that. If price closes above that bar, which it looks like it might, if price closes above that little line that I just drew, okay, we are going to do a buy. Because that's my current strategy. I mark out previous highs and lows on the 5 or the 15-minute, and then when it breaks into liquidity and comes back up, I do a buy, which I just did. Did you see what I did? I hope you saw what I did. I'm in the trading panel. I had selected the buy, and when price broke above and closed above that line, I hit the buy signal. Okay. Okay. Enough for today. Thanks for watching. See you on the next one.